Suppose a Florida LLC has a piece of land bought 3 years ago and hired a construction company to build a single house when the house is sold. Can I allocate part of the profit to the sale or to the sale of the long-term land and the other as ordinary income? Excuse me. What say you, Jeff?
I'm going to assume that the entire parcel of land was sold with the building that was built, Okay. The house that was built. And at that point, that land is no longer capital gain property. You've now converted it into inventory that you're selling.
Dealer.
So no, as a matter of fact, it doesn't play off against ordinary income. It is ordinary income. The entire sale of this property is ordinary income.
Yep. When you buy a capital asset, you have two choices. You either are buying it as an investor, or you're buying it as for sale to your customers. And the decision is always made on the date of the sale. And so the IRS looks at your intent. People get they get bad information out there. There's a ton of it. Oh, if I hold it for a year, then I'm okay. The seminal case on dealer status was somebody who held their property for 10 years before they sold it. But their intent when they bought it was to fix it up and sell it. That is dealer property. That is like buying that you may as well have a car lot. And I bought a car and I put it on the lot. In this particular case, you built the car. Right. And you're saying, but there's land too. Mm-hmm. You develop the land, and that's real estate developers and dealers do not get the long-term capital gain treatment. In fact, there's tons of cases where you can convert land has tons of gain and you build on it and you just screwed it up.
Mm-hmm.
So the way you do this is you set up an S corp for the construction and you sell the land to the S corp on a installment sale. I bought the land. I'm selling it for the long-term gain on the value of that land on that date. And then I put an improvement on that land. Yay. That's in an S corp that is going to build that property and then sell it. And what that's going to do is then you have long-term gain on leg one, and you have ordinary income on leg two.
And we've had a couple good examples of this lately. I bought a property with the intention of flipping it. Things didn't work out. Mortgage rates are high, whatever. So I'm going to rent it out for a year and then sell it later on. Well, can I get capital gain treatment for that? No, because your intent was always to flip that property.
That was the case. That was a case. They bought a commercial property. Interest rates went pollywonkus and the market fell out. They tried to get their price every year. They rented it out for 10 years. Every year they were trying to sell it. And then they finally sold it. And they wanted long-term capital gain treatment. And they're like, the IRS is, no. You were not buying this for its long-term appreciation. You were buying it to sell it to your customers. That is inventory, period. Full stop. You can't do installment sales. So you'd lose section 453, I think it is. You cannot do 1031 exchanges.
Nope.
So somebody says, where did you do your report your intent? It's facts and circumstances. So they look and see, usually they're looking at you going, you're a land developer. Like you do this a bunch. You keep buying land and you keep building properties on it, you sell it. That's how they get you. If you have a whole bunch of single family homes, like I do, like I like to buy them. Every now and again, we sell one. If somebody comes along and offers the right price, or if we're, sometimes we peel off, like we'll buy 40 properties and peel off 10 and sell them to our clients because they're a good deal. I am not a dealer though, because when I buy, it's always this, I'm buying for the long-term hold. They could see, because all of my properties, like the vast majority are these long-term holds. I just don't sell much. Flip that around. You're a developer. Even if you have a property that you hold on to, you better put it in a different entity. Separate it from that business, because otherwise the IRS is going to come in there and say, what are you? What was your intent?
Mm-hmm.
9 times out of 10, you sell that thing within like a few years. You're a dealer.
And it's really easy to find that information. If I bought a property and a couple months later, I put it up for sale, but didn't sell it, they can still see that.
Yeah, they use that.
They see that it was put up for sale, and
If you're audited, right? Now, here's the whole thing. If you're audited.
if you're audited, yeah.
Right. Can you try this stuff? Like, your preparer is not going to do it if they know what they're doing. Like, they'll just look at you and go, I'm sorry, I'm not going to commit fraud on your behalf. But if you did it and you were like, oh, shoot, I really meant to buy this as a flipper and I'm going to keep it long, I'm probably not going to mention a bunch of facts. I'm just going to say, here's when I bought it. Here's this. Here's the HUD. Prepare the return. Oh, okay. They might just go about it and say, they might ask you a question or two. Don't lie, but don't volunteer, right? Then you might be able to get away with it. But I'm for doing it the right way and just being straight up. You know, like, hey, this is what it was. There's ways to get out of it. There's always ways to minimize the damage in a situation. And again, this is the easy one. Hey, I bought it to flip. Prices went down. Interest rates went up. I'm going to sell it to another entity where I'm going to hold it. Okay, do that. But I have no gain. Great. You switched it. This was the flipping entity. Now I changed my intent. How do I know? Because I sold it to an entity where I am changing my intent.
So having watched a lot of depositions and court proceedings of late, is the proper response to their questions? I don't recall.
I don't remember. But you're not supposed to get coached, and you're not supposed to lie on the stand. You know, we're not all slippery like some of these politicians, right? Hi there. Oh, somebody's asking a bunch of questions. Nicholas, put that in the Q&A. We're not going to make it in politics with that honesty mindset. Wink, winks. You're probably right. They're really good. I just, I don't want to get into it. I'll just get mad. I clerked in court, and you hear people lie all the time. That's usually how you know they're lying, is they usually put their right hand up first and then they swear that they're not going to do it. And then they go, and it's like, good nuts. This is crazy. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.